And that already takes us up to the top of the hour. Dale should already be here. And thanks for joining here on the European crossover.
Nice job, Paulie.
Hey, thanks, Dale.
Way to go, my trading warrior brother. So I know that you told me last week when the dollar accelerated to the upside, you had a number where it turned good. And are we into the areas now? I missed your dollar analysis of resistance here around this 5.5.
Yeah, we hit our target from yesterday, which is 95.68. And just to do a quick recap on that, let's go here.
Will you still let me come? Will you still let me come in and listen to you when you go? You know, when it's for members only, starting when? Tomorrow. Tomorrow is it?
Yeah, you know what? You're right. It is going to be for just exclusive to ForexAnalytix members. And it was actually this close above the 94.97, which was on the daily, that targeted then 95.68, and we just made it now to the 95.68.
I had a feeling that you had something up there. So, you know, we still have 1 day left on the sale. So, Paulie's not going to be here for free. And we've had him here for a month, so you guys could see how this could add value to what you're trying to accomplish. Also, the hours are a little bit more accommodative for Europeans and even the Aussies. It's before midnight for you guys. And I don't know about you, but I've listened to Paulie, and there are many actionable pivots, inflection points, targets, whatever you want to call them. And then after that happens, he gives you probable targets, objectives. So, you know, if you like to scalp, you've got a leader now. And so, you know, this is just another advantage of being a subscriber. I mean, you just go through our team. I mean, before you click and join, you look at the team. And you've heard Paulie for a month. I know Blake has wanted Paulie on the team for quite some time, and you know, it's definitely an edge for people that, like, you hear Paulie doesn't like to take things home overnight too often, but he takes care of business. For people that like to get paid every day, at least that's their mission. You got to tune in to Paulie, and that means you have to join up today and get the best price possible. Yeah, that's the end of my pitch, buddy. And it's not a pitch. You know, I don't say things unless I really believe them. You know, when I tweet about all the talent that you know, the Steve and Blake and Stelios have brought together in you know, in a few years, I really think we have the best research and analysts in both quantity and quality out there. Because, you know, I spend a lot of time on Twitter, and I go check out other things, see what's out there. And I'm sure you feel the same way, Paulie. You know, that every day when you get up, you're doing a good work trying to help people navigate very treacherous waters.
Yeah, we have some great people in there, obviously including Amanda. Amanda is very, very active in the chat room and an excellent cable trader, to say the very least.
Yeah.
Just a lot of good traders in there. Joe, Stelios, Steve, Blake. I mean, you can pick everyone's brain. Just a lot of activity and, you know, real good camaraderie as far as everybody helping each other out on trades or on outlooks, posting charts. And as mentioned before, is that you have the, you know, depending on what your flavor is, if you like basic technical or whatever, harmonics, as well as patterns, Elliott wave, you just choose.
Grega, I mean, he's an award winner from FX Street. That's what I mean, you know? Yeah, you know, you bring up Amanda. Amanda and Joe laugh at what I said once, because I said, you know, Amanda trades, and she takes care of her daughter and herself through trading. And, you know, one of the reasons I said it is I was brought up by my mother, a single parent, and also I'm a trader. And there are many times the pressure of trading, I'm married now, but many years I wasn't, the pressure of trading just to, you know, pay your bills, you know, so you're doing it at living. You have to generate a certain amount of pips every month to cover your nut. I just know how hard it was for my mom. And then I also know how hard it is for me at times and everybody to pull equity out of the market. And can you imagine having the pressure? I mean, Blake does it, Steve does it, but the pressure of having to make good decisions when you and your dependents count on it, tough. She's tough, man. That's all I could say. All right, buddy. Well, I'll still be tuning in. You'll see me there, and I'm glad to have you on the team, buddy.
Well, I'm certainly glad to be on it, and thank you very much for the kind words, and good luck for the day ahead.
All right, thank you, Paulie. All right, so I'm going to figure out which organizer I am, and I have a follow-through teaching from last week for everybody. All right, so last week the lesson was, and I know it's a lesson because I made you guys write this down. How many wrote this down about when a market has a breakout, a major breakout out of a fairly long-term range, and it gives you too much time is sideways, and too many opportunities to buy the breakout when it happened here, and you had like almost another month to decide, hey, Russell's breaking out. And then the second part of it was, okay, Susan did good, Susan. The second part of it was to have an open mind that sometimes these false breakouts and false failures turn out to be big trades. Blake talks about it all the time. Steve does. And here you go. Here's the evidence. Yesterday, the Russell really capitulated on NAFTA because, some of the rationale for people being in, it didn't make sense, but, the market narrative is the Russell, the domestic companies here in the U.S. did not have as much exposure to, tariffs. Also, the tax bill was supposed to help them more. Also, a strong dollar is supposed to be supportive to Russell. Well, we have a strong dollar, but pretty ugly looking chart. I would expect, as long as we don't negate the breakout again, at least back to this moving average daily around 160. And when you look at a weekly, if this is just beginning, here's your 160 again. There's a confluence between a broadening top line. This is the bottom of the broadening top, and the 50-week moving average around 135. So I know it looks probably impossible and no one thinks that could happen, but the follow through on the lesson was, first you're skeptical, you don't buy it. If you did buy it and it keeps giving you chances, you can get out of your longs, right? But then, you don't have to anticipate to see if it is a failure. You could have sold this candle even at the close, right? And maybe you took a little bit of a drawdown going into yesterday's opening, but now you're in windfalls. Okay. Just a couple other things I want to touch upon. Like Paulie says, we're into this resistance level. I said 95, 50, 60 yesterday. The reason was we had a confirmed high right here. I think we're trading here. So we still have another confirmed high. I'm tempted, but the 1 hour just has a little bit too much mo for me to try it, even the 4, and I miss trades when I follow my rules. But my rules are I don't like to short a market with an RSI over 70. But it's also painful to not follow your rules and lose money. So I did that with the yen last week. I'm still fighting it, thinking that maybe we'll get back to this overthrow, which is coming in now around 1340, and we'll see what happens there. It looks like we have a little bit of a failing rally. Also, S&Ps, remember I talked about the off number that held last week. We're getting a bounce here. but the 2-week off number, we're underneath it. And, you know, actually on the weekly, and it's only Tuesday, we have a chance for a pretty nice reversal. Did not make a new high, but potentially, let's see, yeah, the high was 37, the higher was 42. We take out last week's low, which was 29.03, which it held on 2 separate occasions. There's problems, and the off number, all it has to do to give a 2-week reversal sell signal is close under 29.90, which we're 8 handles under that right now. Okay, so I'm looking to fade it for a trade, the dollar. Okay, so we have a great guest today. I haven't talked to Ashraf Ladi since my FX Street days in LAR. And, you know, I saw him on LinkedIn a few months ago and just reached out to him and said, you know, we had such a great time every time we did an interview, and the viewers, listeners always really enjoyed it and learned some things. And he's got a pretty interesting topic. I saw it on Twitter. He's going to talk about the US dollar, yen, and the dollar, and which one he believes leads. So it's an interesting correlation to me. I look at it all the time. So you may want to stick around to hear Ashraf. If not, it like always, it'll be recorded and on our YouTube station. Today is a day to ask yourself if you really like the broker you're with. And we get comfortable and we accept things. But, you know, let's do something different today. So if you're not satisfied and, you know, you complain to your friends and everything, oh, my fills, and anytime I want to get money out, it takes so much time, and there's spreads when things are volatile or, you know, not the greatest, or you want to have another account. So, you know, let's face it, you don't know what kind of horse you have until you run it against another. You want to get a hold of Trent over here for our, also, you know, our reimbursement program. Go to our website and click Learn More, and you'll have numbers. If you're overseas, the reimbursement program could pay for your subscription. Okay, and if you're in the U.S., it's not available to us since all the draconian stuff happened here after the crash in 2008. So anyway, this is for you. This is how you reach Trent. Justin, Forest Park FX. So they're our sponsors, so they support us, and we support that by referring people that need to find a better option for what they're doing, where they're trading. And that's it for me, at least on the opening. Yeah, hi, Blake.
Hey, you sound really jumbled up, or is it just me?
What?
No, he does.
Okay, it wasn't just me. I was, yeah, your internet you got really jumbled up there. So,
oh, really? Huh.
Yeah.
Okay, for a long time?
For a few minutes, but you seem fine now. It's just, it was weird. Okay. I was thinking, oh man, maybe my internet's on the fritz, but it's, yeah, you're a little jumbled there. So.
Okay. Well.
How you doing?
I'm doing good, buddy.
Good.
Turn around Tuesday. Dollar following through. You see anything that might be worth a fade out there?
There's a lot. There's a lot of stuff going on today. And first of all, I want to say, Paul Franco, great job. And you guys, if you want to listen to Paulie in the morning, you have to be a ForexAnalytix subscriber. Today is the last day to take advantage of our seasonal pricing. We had a little bit of a logistical snag, so that's why you guys got an extra 2 days. So it's good news for you. You know, that's you guys are going to be able to listen to Paulie every morning if you're a ForexAnalytix subscriber. If not, the face webinar that you listen to today, it'll continue to be free. So make sure you tune in to both when you can. And you got a great interview today with Ashraf Ladi. He's I was trying to explain to people when I bridged the gap. When I bridged the gap from equity markets to FX in 2002, So I was from 1996 to 2002, all I traded were equities, and I really flipped over to the FX market once individual investors in the United States were allowed to trade currencies. I was like the natural fit and the most knowledgeable about currencies at that point with the Wise Trade organization.
It was the wild west back then.
It really was, yeah. And Ashraf Ladi was one of those people. He was really one of the early voices in the FX market. He's a very knowledgeable person. I have a lot of respect for what he does, and so he's going to be a really great interview. I mean, he's been in the business now. I mean, if I've been in the business almost 25 years, he's been there, probably just as long. I think he's always been a currency guy, but really great guy to listen to. So you guys are going to be in for a great treat. So make sure you stick around for today's interview in the next 45 minutes. But before we get into that, I'm going to talk a little bit about, here's the S&P, speaking of equities. If you want to know why risk bounced this morning, it bounced right off of wedge support. This is huge support for the S&P. Let me remove that. So huge support for the S&P, and you can see we bounced right off of that support. And if we break today's lows, or you said it, it's turnaround Tuesday. It might be turnaround Tuesday. It might be where the market actually starts to roll over. But there's a lot of implications here. If the S&P actually breaks down, so let's just talk about if the S&P breaks. You can actually say it's last week's lows, which would be right here. If we break last week's lows, there's a lot of different things you can do. Give me an example of something you can do aside from shorting the S&P. What could you do?
Buy bonds.
You could buy bonds. What else could you do?
Maybe go short the yen.
You can, or buy yen, short dollar.
Yeah, short dollar. Yeah.
You could buy volatility. You can look at maybe selling the DAX. The DAX has been a big underperformer. You can look to maybe the dollar will continue to strengthen, which we'll talk about here in a second. There's a lot of things you could do as a trader if the S&P actually starts to break lower, and that's the thing is you have to have a little bit of flexibility here. And I think the reason why I really want the S&P to break down, and you guys have to understand that I'm not a doom and gloomer. I do think that the trade policies are actually going to have a long-term negative effect on when I say long-term, I should probably rephrase that, intermediate negative effect on the U.S. economy. I think the tariffs are going to bite. I think inflation's going to rise. I think it's going to be.
You're like Peter Schiff now.
Yeah. No, but I also have to say that regarding Donald Trump, whether you like him or you don't, he's doing a lot of the hard stuff that most politicians have not been wanting to do or tackle. So, whether it's 5 years from now, 10 years from now, 20 years from now, some of the changes that have been made over the last 2 years probably are going to be better for the U.S. economy longer term. It's probably going to hurt in the near term. But the reason why I want the S&P to break down is not because I'm a doom and gloomer and I think the S&P is going to 1,000. I think the S&P is going to sell off a little bit and we might get a 5 or 10% correction. But the reason why I want that to happen is not because I necessarily want to short stocks, but I probably will position myself for more downside. But I'm looking at it from more of a volatility standpoint. When we get a breakdown in the S&P, that usually creates volatility in the FX market, and it gives us more opportunities as traders that are trade intraday. The grinding sensation higher in the markets are just maddening. It's maddening when you're trying to trade. Correlations are aloof. It's tough to trade the markets when you just are one direction for so long. So I do want to start to see some volatility in the markets, and the first step there is seeing the S&P break lower. So you know, and that's why I'm watching so carefully, you know, last week's lows. If we break through last week's lows in the S&P, as you can see right here at 2,900, that to me is like a green light to start really trading from a higher volatility standpoint. And you know, how you decide to navigate that through currencies is, you know, however you decide to navigate, you know, whether it's short Aussie yen or, you know, buy some volatility, or, you know, maybe get long precious metals. I don't know. I mean, there's so many different things. But let's talk about the dollar right now, and let's talk about the euro. So the euro stopped just ahead of its 618 retracement. Now, this is a pretty big deal, what you see here this morning. For those of you that are looking at the charts and listening in, you are probably wondering what is such a big deal about this chart. Well, the big deal about this chart, in my opinion, is that you took out a lot of stops today. This is a big inverted head and shoulder pattern. A lot of people were expecting a move to 120. Everybody was talking about euros going to 120 and beyond. And, you know, today is probably the day where a lot of those long-term stops got tripped. Now, we did stop ahead of 115. That's the big 618 retracement. I do think if we break through 115 and you're long the euro, you're going to be sorry. So I think this is where really all the stops are going to reside, are below 115. I'm such an idiot. I actually bought the euro at 13.19, and I was trying to update all the ForexAnalytix charts this morning, and you know, I was like right here in the euro dollar. I was updating this chart as we were right here near the 618, and I bought it, and then I'm like, you know what, I'm just going to get out of it. I'm going to go update some other charts, and of course I left, you know, a good 20 pips on the table as it bounced off of the you know, the support, which, you know, I wrote here, the euro dollar has slumped towards the 618 retracement, taking stops below the previous head and shoulder, which may find support ahead of the 115 level now. And I bought it at 115.19, and then or 18, and then I took it off at 20, and then of course it bounces more because I just wasn't paying too close of attention, which I should have been. But anyway, that's why the euro is pretty significant, because we took all these stops, and now it's like, okay, you know, now we may recover. But if the S&P does break down, I don't know if this 115 is going to hold. You know, we may actually go lower than that if the stock market starts to break lower, and that's something that we all have to be aware of. The pound stopped right at this is the broken trend line. You can see this right here. Let me see this. I'm kind of grabbing it for you. That's been on my chart literally for 3 weeks, maybe longer. All right, this trend line here, it hasn't gone anywhere. We basically hit that trend line. You see this hammer forming. This is a big deal. I mean, you know, the cable's under some pressure. Yeah, am I getting long the cable right now? No, but would this be a good place to be on the long side, or at least, you know, looking for a bounce? Sure. If you're short, you probably want to be a little careful here. We might bounce back to 130. The Aussie RBA was dovish, worried about inflation, growth, China trade worries. If you read the analysis from last night, the end of day analysis, the major downtrend line comes in at the 72.70 level currently, and the 50% retracement is at the 72-cent level. It's offering support ahead of the RBA decision tonight. Although we are not expecting the RBA to move on rates, the market will be looking for clues for the future, especially in the face of the U.S.-China trade war. The RBA did cite that, and you know what? The Aussie took a beating because of it. We slipped right through that 50% retracement here, and we dropped towards the 618. So the Aussie is, you know, if we see some downside pressure in equities, the Aussie's probably going to take the brunt of it, I would think. You know, the dollar Canadian has found some support ahead of this 127% extension. You know, be cognizant of where the dollar Canadian's at. If you guys are wondering why there isn't a lot of downside follow through in the dollar Canadian following the, you know, new NAFTA or USMCA agreement, we're retesting the major multi-year trend line, and to be short the dollar Canadian down here, I think it's a little crazy. I actually played the dollar Canadian to the long side yesterday. I made a little bit of money. I played the Canadian yen short last night, made some money. I'm actually looking to short that sucker again tonight. And if you look at the Canadian yen, we had a big Gartley pattern. So if you missed this one, this is on ForexAnalytix overnight. You know, as long as we stay below 89.30, you know, chances of a pullback are pretty high. So, I mean, you know, we could pull back to 88 yen and, you know, fill that gap pretty easily. We haven't done so yet, but I don't think that's out of the question at this stage. So there are a lot of things that are happening. Dollar index, one last thing I want to point out. The dollar index is also has stopped at the 618 retracement. A lot of horizontal resistance comes in here. Whoops, I meant to be on the 4 hour. Here you go. The dollar index just, you know, tagged the highs that we saw September here, August, and it's just ahead of the 618. I will tell you this much: if the dollar index breaks here, it's going to squeeze a lot of people. If we, you know, and this would be the euro below 115. Do I think that's going to happen? I don't know. I think it's, you know, a risk. And I think if you're long the euro dollar, you better be on the defensive, or in other words, if you're short the dollar right now, you best be on the defensive. The flip side is if you're long the dollar, okay, you got long the dollar as we broke through this, you know, we broke through this trend line, you know, last week, and you got long, I would probably be paring back longs right now. I don't think I'd be too aggressive right now, knowing that there's all this resistance up here. So again, I'll reiterate, does that mean you should short the dollar? Yeah, maybe if you're going to scalp, but you know, just beware. We break above 95.80 in the dollar index, and you're not going to want to be short the dollar, I don't think. But in order to see that the dollar continue to break higher, I think that would happen only in a period of risk aversion, meaning if the S&P broke down, the euro is, you know, the euro yen's probably going to go down, the pound yen's probably going to go down, the Aussie yen's going to go down. As a result, you're going to see the dollar yen probably drift lower, but the dollar really strengthen against all the other majors. And I think that is the risk with those. One last thing I'm going to bring up, which goes back to my blog. If you guys didn't read the blog from Friday, I think it was Friday. Yeah, it was Friday. So I talked about the 10-year and, you know, the S&P and the dollar yen. So if you look at the 10-year, this is there's the largest short position in the 10-year bond right now on record. Lisa Abarovich, I'm trying to think of her name. She is a reporter for Bloomberg or Barron's or something. I follow her on Twitter. I just can't. First of all, I don't know how to pronounce her last name. Second of all, I can't recall exactly who she's a reporter for. Anyway, she had reported that you know, 10-year bond market interest is at all-time record short interest. Well, you know, the risk is that we have the bond market that's at a big 50% retracement, longer term, big 50% retracement. We're setting up like a double bottom. We start to squeeze here in the bond market. That's you know, when I was asking what are the things that you do if the S&P breaks down, the 10-year bonds are probably the bonds that you want to play on the upside. You know, the long interest of yields got so aggressive as we were above 3, which we were still above 3%. If we see the positioning, you know, reverse a little bit, you could see the bond market here start to really press higher. And if that happens, you know, that's going to be happening as the stock market, you know, breaks down. 10-year bonds are probably going to start to rally. Then you got a longer term double bottom here. Then that means that the dollar yen, which with its inverse relationship, the dollar yen would come under pressure, which means that all of these traders that were long the dollar yen or at least got squeezed as we pushed through 113.20 last week, they're going to find themselves on the wrong side of the market. So, and I think that being long the dollar yen when you're up against all this resistance is very dangerous. I think if we slip back below 113.20, it's going to be curtains. You know, remember how in the old gangster movie they'd say it's curtains. Anyway, we don't have any data today. We have Bernanke. He is speaking. He is Bernanke. Did I just say Bernanke? I said Bernanke. Stelios, did I just say Bernanke?
Yeah, you didn't even say Yellen. You said Bernanke.
I know. I skipped right over Yellen. Pal, holy crap! I don't know where that came
Yeah,
from.
you're
getting up
thinking
at like.
Yeah, you're stuck in the past, man.
I know, I am. I'm still living in 1982 for crying out loud. Yeah, play some Duran Duran for me for crying out loud. Anyway, Powell speaking at Outlook for Employment and Inflation, the National Association.
I'll give you a hint. Just the guy without the beard.
The guy without the beard, right? I actually enjoy listening to Powell. He's fast. He speaks succinctly. I actually enjoy listening to him as with the Greenspan, who was really my first Fed governor.
Briefcase indicator.
Because I cared when Greenspan would speak. It's when I really started paying attention to what Fed governor. I was like, in the markets long enough to where I'm like, okay, what he says actually does matter. So then I would have a thesaurus sitting next to me trying to figure out what the hell he just said, for years and years and years. And then Bernanke, he's so timid and shy and soft-spoken, and I was like, oh, I'd fall asleep. And then Yellen, her monotone would just, kill me. And then I enjoy listening to Powell. He's good. He's whether you agree with his policies or not, I actually enjoy listening to him. So anyway, he is speaking today, so he could obviously move the market a little bit. But Stelios, how you doing today?
I'm very good, thank you. Good morning, everybody.
Good morning.
I'm good. The good weather is finally back here in Athens, so it's summer again.
Yeah, so you guys are done with the torrential rain, or the 1.5 inches of rain that you guys got.
Yeah, exactly. Now everything's good, so we're all good. Okay, so actually let me answer a question before we continue, because we have our friend Jason who's saying, I'm a subscriber, will the link to Paulie's webinar change? And the answer is yes, and there will be a new link that you subscribe to the same way as the face webinar, and you will use that to join Paulie's webinar.
Yeah, you'll get the link via an email. So if you're you just check the email, and actually you should probably check your junk folder just in case. Your emails that you have registered to the ForexAnalytix account. So that's where you're going to get your email link to and it's exclusive for you.
Yeah, exactly.
Okay.
I've actually received, even though it's not live yet, I actually received the email today. So, people who have registered should be getting the emails already. Anyway.
Awesome.
So, okay. So.
And is Steve here yet?
He should be.
I haven't heard him, so I wasn't sure if he's here yet.
Let's
I don't see him. No, he has. I know he's going to the proctologist or something today.
Okay. Well,
at least you found that funny, huh? Hey, I need to just step away for like literally 2 minutes. I can come back.
That's fine.
But I'll be here. Let me flip it over to you, Stelios, and then I'll be right back.
Yes, sure. Let me switch to whatever. It doesn't matter. Main screen. Show my screen.
Maybe you can talk about this beating the cable's getting today.
Yeah, I mean, it's not just cable, it's the dollar in general, but yeah, you're right. It's the dollar is definitely recovering some of the recent losses. And let me start with a couple of other things. First of all, the RBA left rates unchanged, slightly on the dovish side. I think they're, in my opinion, they're looking for excuses in terms of why they're not going to hike. They cited the household spending being low, which is, it is obviously it's an important thing, but your mandate is different. You're supposed to control inflation and unemployment is good. Everything else seems to be going well. I think they're waiting to see how the whole U.S.-China trade war will continue. And as soon as there is some stability, I think that's going to give them the green light to to become a little bit more aggressive. So, that's my take on the RBA. Obviously, the Aussie dollar has suffered a little bit today, along with most other currencies against the dollar. And the other thing that everybody's been talking about this morning, and it's actually funny because they've been chatting away all morning, are the Italians and the Europeans. It's the EU people have been criticizing the decision by the Italian government to put their deficit to 2.4% of GDP. That was on the high side compared to what they were initially talking about. So the EU expressed their discomfort, and then Salvini, I think it was Salvini, replied essentially, and he said, they're causing damage to Italian bonds. They say he actually said, I think he said something along the lines of, the EU should compensate us for our debt, becoming, we're losing ground today and yesterday, and which is a little bit funny because it's not the EU people speaking really that's leading their debt lower, and it has been coming lower for the past few days. It really is the state of their economy. I think it reminds me of situations with Greece where Greek debt was being smashed, and you had Greek politicians say, "Oh, all these people who are just after profits and they want to play games with our debt." Well, they're not doing it with bunds, are they? There's a reason why they're going after your debt. So we had, to summarize, we had a lot of toing and froing in terms of the euro in Italy, and the euro is not doing very well today either. I said it yesterday, and I still think this is the case, that this problem with Italy is probably not going to go away very easily or very quickly. So I don't think they're going to do something and just kick the can forward, and that will be that. Italy is much bigger than Greece. Their debt is over $1 trillion, I think, and compared to Greece's 300 million odd or something like that. So this is a much bigger case and more important case, and it requires much more attention, I think. So definitely following that. And actually, Salvini also said this morning that there is absolutely no.
Just really quick, Boris Johnson calls on the Tories to back Theresa May. If you want to know why the cable just spiked up,
okay.
That headline just hit just a second ago via Bloomberg. So.
Okay, thanks for that. Thanks for that.
Yep, sure thing.
I hadn't been looking at the headlines. Okay. The other thing which I want to say is that Salvini actually said there is absolutely no plan for Italy to leave the euro, which it makes you think, right? It's not true unless it's been officially denied. So, just something to keep in the back of your mind. Right.
Every break holding in silver and gold for you still.
Every what, sorry?
Every dip is being bought. The dip was bought yesterday in silver and gold. Dip was bought this morning in silver and gold. So gold actually acting a little better, but like I said, over 1470. Silver.
I think so. Yeah, I think silver actually looks pretty constructive here.
Yeah.
So it does. And I'm not long.
You're going to be rich. You're going to be rich still.
I only have a small position, man, but I really was. I was really.
I thought I could be your long lost uncle.
Yeah. Hey, I play the lottery. You never know. I play the lottery. I was looking silver. This area around 14. You can see how big a zone this is. When I touched it there, I was thinking, do I add? I wanted to add, and then I just missed it, and I'm obviously kicking myself a little bit. But I'm still constructive on this, even though it's been the past 2 years have been very well sideways, as you can see, and it's been deteriorating the last year. But now every dip is being bought. The gold to silver ratio is at very high levels. So usually when you see a reversal of that, the precious metals in general start to go higher. But it is what it is.
Luis Yamada said, and I know I said this first: the longer the base, the bigger the launch into space.
Yeah, it rhymes as well.
Base, right? Yeah.
Yeah. And you know, this.
Dale, you rhyme everything, by the way. Just I don't know if everybody. Do you talk to your grandkids that way?
I do. Woo.
Yeah, I'm sure you do that to your grandkids all day long.
Okay.
I'm sure they're like, Grandpa. Anyway.
How about this? How about this one, guys?
Used to that term.
Yeah, big consolidation in
Yeah.
Bitcoin and Ethereum. Both of them are very, very wound tight. So.
And they've been trading quite technically, especially Bitcoin has been just going nowhere for the past few, couple of months. And is this the break that pushes down to what, 3,000? I mean, I don't see any other targets, but if it doesn't, then if it bounces properly, that could easily go to the top zone, 10,000 plus. So this is one I'm looking at quite closely. And also, I like oil. I posted this on the chat room this morning, and this is something I put here months ago. These arrows. Obviously, it didn't go as low as I thought it might go, but I really thought it was going to test this huge. This area goes all the way back to 2011. And it's almost getting there, and I think now is a good. I think it's a really good part to probably be looking for, like a short-term short.
Yeah, it looks like a third drive, but too much mo and what the Iranians launched some missiles, ballistic missiles, into Syria that landed about 3 miles away from the troops. And I know, you don't from the U.S. troops. So, and Pompeo was really pounding the war drum. I don't know if this is politics or not, Blake, but I wouldn't be surprised if something happens there, because one way to unite a country is if we have an enemy, and if there's any kind of conflict. So, I even though it's a third drive, the fear of what the Iranians could do in the Straits of Hormuz makes me not want to try the short side of crude.
Yeah, being short crude, you're always short an option, right? The black swan event. So you're absolutely right.
Yeah.
I guess the one thing I would actually just add to that is, if you are long and you've been riding the crude rally, you have to be a little careful here, because you are at that. It's a major level.
Why not take?
Yeah.
Take something off the table up here.
Yeah, of course. I mean,
great trade.
It really makes sense. But great analysis there, Stelios, over the longer term. So, Amanda wants to accentuate that Boris says supports May's original Brexit plan, not her, but her plan. And I'm here. I'll take over to Stelios if you want me to, because Steve's not back yet. So this is what I was reading. Boris Johnson calls on Tories to back Theresa May. So what Amanda was saying is not necessarily Theresa May, but her plan. So, but the cable is getting a little bit of lift off of the support, but still, the pound's still trading heavy for the most part. We have to get back above 130 in order for the cable to look semi-constructive. Only thing I would add here. Wow, gold's actually hitting new highs. Take a look at gold. Where is it? There it is. Take a look at gold ripping right now. We broke this is an hourly. We broke this downtrend line. We came back, retested, and then just spiked higher. So this is going to keep the dollar on the defensive. I think, this could allow for the euro and the pound to stay, have a little bit of a natural bid, but more importantly, the dollar yen actually is going to probably trade a little heavier here with gold rallying. You can see this, it's an hourly chart. So we've got a nice little gravestone doji, maybe pin bar, shooting star type of thing.
Gold is doing this, Blake, in the face of a strong dollar, like last week too. So I mean, it's been a couple of weeks of fairly firm, stiff dollar action, and you would have thought they could have pummeled the gold on this. Instead, it's put in that bottom at 61.8, 1181, and here we go.
Yeah, and you know, I'll go back and reference these charts here in the dollar yen, is that we're up against a lot of longer term resistance around this 114, 114.50. So I mean, if you're long, you've got to be, you know, long the dollar yen. You've got to be a little nervous, especially with precious metals, you know, showing some life, and also with equities, you know, flirting really with some pretty key support. And you know, those correlations, they've been broken for a long time. I mean, when you have, and I'll go back and talk about, you know, the S&P once again, is when you have the stock market that has been just marching higher, and we've been, you know, grinding into new highs, and it's been nonstop, very frustrating for all of us. You know, correlations will break down when you have a major market like the S&P that's just, you know, just a one-way train. You know, once we see this you know, break this monotony of just moving higher and all-time highs all the time, once we get some, you know, volatility, that's when correlations really start to take hold again, and you might see that, you know, gold break higher, dollar yen breaks lower, you know, but the dollar may strengthen against other majors, which puts all the other yen pairs under pressure. You know, bonds start to show some life and start to rally as yields come down. So there's a lot of different you know, correlations that will come into play, I believe, if the stock market actually shows some sort of selling. You know, one of the things that I'm going to go back, or I just want to say one last thing about the stock market. One of the things that probably is a little nerve-wracking for equity market longs is that we gapped higher on the NAFTA news or the USMCA news, and by the end of the day yesterday, actually the NASDAQ briefly turned negative at the end of the day yesterday, but we bounced, you know, the last, you know, 30 minutes or whatever, you know, some short covering came in. The Russell, and you were showing this earlier, Dale, the Russell looks extremely vulnerable here, and you know, as tax, or excuse me, as the tariffs bite, you know, it's going to really affect the midterm or the medium-sized small businesses in the United States, which is really the backbone of American business. I mean, it really, you know, it's the backbone of the economy. I forget what the number is, but you know, large number of small businesses are, you know, medium to small businesses. Take a company like my wife's company that curates local products here in the Arizona area. That's what she does, but she has to buy her, you know, boxes that she ships everything in from China. I mean, you know, on a $20,000 order, she got hit with a 20% tariff on those boxes. I mean, you know, that's a big bite for a small business, you know, to take that, and they have to offset that by, you know, pushing those prices off to their consumers. There's a lot of talk today about you know, Amazon, and Walmart, and their cost of wages going higher, you know, and you know, products. I believe that the holiday sales are going to be a lot more scarce this holiday season, if I had to guess. Anyway, just some food for thought there. Now we were talking a little bit about equities. Here's NASDAQ. NASDAQ 100. You know, possible double top here, especially if the S&P starts to break lower. The Dow, which also is really struggling with the all-time highs here, around the 26,800 level. You gotta watch it. I think that these you know, big divergence on all of these charts, whether you're looking at the daily charts or the weekly charts or the monthly charts, even, you're just seeing relative strength diverge all over the place. So all a little bit of warning about equities in general. So let's take a real quick look at the euros. The euro's still trying to find a little bit of support here at the you know, previous lows, and the 618 around 115. 115 really got a hold today for the euro dollar. The cable, it's finding support on that previous trend line, broken trend line. So this is a very big pivotal area for the cable. As you guys know, I think the cable needs to get above 130 to take the downside pressure off. Will that happen? Yeah, I don't know. I'm not willing to bet on the cable without it being back above 130. That's for sure. The Aussie's still under a bit of pressure. The Kiwi too. You know, the Kiwi found support at this previous trend line. You can see it's a very pivotal area, and the 618 for the Kiwi, and that comes in around the 65.75 level. Dollar CAD is finding support, but we're not filling that gap here until we break above like 128.50. I think we have to break above 128.50, and it might open the door for a possible gap fill in the Canadian, you know, to make it back up here. And then if that happens, then the risk of a weekly false breakdown is high, and that is I think a bit of a risk for the dollar Canadian if we start to firm up down here. The Swissy, if you're playing the long side of the dollar Swiss, you have to be extra careful at this point, in my opinion, because we're tagging the 618 retracement, or very close to. Let me grab this. Oops, that's not what I want. I want this. This is what I want. Okay, you can see all this previous support acting as current resistance. Very easy, basic technical analysis, but it all comes in at right around the 618. And so if you're long the dollar Swiss, you got to be a little careful. We get some quote unquote risk off. I wouldn't be surprised if the Swiss franc starts to you know, catch a bid, you know, with the Italian budget concerns. The Swiss franc might be a beneficiary. So does that mean you short the dollar Swiss? No, I don't know. I mean, the risk reward is there, but you know, the Euro Swiss might be the better candidate of a currency pair that might actually trade lower. So that's something to keep in mind. The dollar Mexican peso. Oh, one last thing. I did play the dollar Mex on the long side yesterday. I think I bought it at 1862. I sold it at 1868. So I played this. See how we did this false breakdown. Let me grab the and everybody in the chat room. You know, we call the U.S. dollar Mexican peso, just so you guys know, is little our private ForexAnalytix nickname for the dollar Mex is Salma, like Salma Hayek. So if we're buying Salma, we're usually buying the dollar Mex. Anyway, I picked up Salma yesterday at 1862 because it looked like we were going to get this false breakdown and then rip, and we did. You know, rip higher. I obviously got out of it a little early. I was just more or less scalping it. But the point I want to make here is that the dollar Mexican peso actually made a false breakdown, and with you know, it was more the buy the rumor, sell the news trade, which that's what we got here. I think that if you are currently short the dollar Mexican peso and you're trading it on the short side because of, you know, NAFTA, and you knew a deal was going to get done, yada 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 yada, I think your stops are probably trading around this this 19 level. I would assume, if you're on the short side, which I'm not. I'm just, you know, trying to look at it from the other side. Who's trading the other side of this market? Which, by the way, the 200-day moving average is right around the 19 level. I mean, the 200-day moving average is 1902. So if you're on the short side of the dollar Mex, you probably have your stops nudged somewhere around here. The reason why I point that out is because if the dollar Mexican peso continues to get a lift, it could really start to squeeze some shorts, and that would be you know, along the same lines as the dollar Canadian. If you're watching the dollar Canadian, you got to keep an eye on the dollar Mexican peso. I think both of those currency pairs are still at risk of the buy the rumor, sell the news type of event, especially if we get some risk aversion. Typically, if you get, you know, again, going back to the S&P, if the S&P actually breaks the support here, you know, one of the natural inclinations of the FX market is to sell some emerging market currencies. The dollar Mex is a natural, and even the Canadian, the dollar CAD tends to rise in tandem with the VIX. So if volatility starts to spike, dollar Canadian could spike up higher too. Now that we're past NAFTA, all those correlations come back into play. Those correlations that we really haven't thought about over the last several months, those are ones that that as traders we have to start, you know, keying in on, especially if we see some bigger moves in some of the broader markets. I know Stelios already talked about this, but here's crude. Crude's coming up to that major 618 retracement. We're hitting new trend highs. We haven't been up here in ages, and this is all big previous support from way back in 2012, 2011, 2012. So I'm not saying that you should be shorting crude. But what I am going to tell you is if it breaks through 77, we're probably going a lot higher in crude oil. And we did extend through this wedge and complete, basically, I would say our maximum target of this wedge has been completed real close to. But there is a risk that if we break higher, things are going to start to accelerate. And as Dale has just pointed out, it's not just the economy regarding crude. It's geopolitical as well. One last thing I'll look at before I turn it back over to Coach is here's the dollar yen. Again, if you want to know my feelings on the yen, go back and read this blog post from Friday. Here, I'll just make sure I put it in. I'll put it in the link or in the chat box for you guys. This was written on Friday. So you'll know exactly where I stand. You'll know exactly what my thoughts are regarding the bond market. And here it is. I'll put it right in here. And I think you have to be a little bit careful with these yen pairs, especially if the stock market starts to pull back a little bit. Euro yen retesting this 131 level. Okay, but that's also previous trend line. So if we break through, like, let's say the lows, which is 130.70, we break through 130.70, that's going to be problematic for any euro yen longs. The Aussie yen, we're struggling around the 618 retracement. So actually, you could probably extend this fib level out to right here, which is the 618. So the Aussie yen looks a little vulnerable, especially with the RBA, and the Canadian yen, we have this big, Gartley pattern that is obviously, looks like it's gonna weigh on the market. So with that being said, I'm probably going to pass it back over to Coach here in just a minute. But Stelios, are there any questions? Dale, are there any questions that have come in that I can answer really quick before Ashraf comes in?
There's one that our friend Andile is asking, and I want to answer that if possible. He's saying that he's asking if there's any correlation between Bitcoin, because we showed the chart before, and the dollar. And I think the answer is, most dollar-denominated assets do have a correlation with the dollar, but Bitcoin in particular, it's a very, it's a relatively new instrument, and its daily volatility is insane. Like today, where it's doing nothing, it's still down 0.5%. So I think at the moment, the influence of the dollar to Bitcoin price is very little, very small. When it becomes a more mature instrument, it will probably become greater. But my opinion is at the moment, there is very little correlation.
Yeah, I don't pay attention to cryptocurrencies at all for correlation reasons. Now I've mentioned this in passing, and I'll say it again. There's a lot of institutional money in these cryptocurrencies. Whether you think they're going higher or lower from here, I'm starting to, as much as I'm not a big fan of cryptocurrencies, and until they are really used somehow on a more global scale, on a from a consumer standpoint or transactional standpoint, I'm just not a big fan as of yet. But there is a lot of institutional money going into the crypto market, which makes me believe that they are here to stay there's going to be some value proposition. And you guys have heard me say this for the last, the entire year of 2018, when I said there's no way I would touch, these cryptocurrencies when we were in December of this last year, if you remember our face webinars. But I've told you since then that I think there is going to be some sort of value at some point. And I don't know if we're there yet, but man, these things are still trading really heavy, aren't they? Oof, man.
Yeah, Blake, they are.
They are. So,
but the old Wall Street adage, never sell a sleeping market, definitely looks like an EKG of someone in a coma.
Yeah, and we may see, you know, another couple of years as you know.
But I'd like to be
figure
able
out this market. So
I'd buy some at you know, those lower targets people are talking about, 2,500.
yeah, I mean, you know,
there.
I don't know. I'd have to do some more work once we got down there to see, you know. I'll tell you what, I do have a Coinbase account, and I'm not in anything. I'm just saying I've got it for whenever I feel the time is right, which isn't today. So
let me know, buddy. Let me know.
Well, maybe I'll start talking about it a little bit more once. All right, guys.
All right.
Hey, have a great interview today, and
okay.
everybody, thanks for listening in. Don't forget to visit Forest Park FX. They are our sponsors for the FACE webinar, so you can obviously get to them through the reimbursement program link, actually, and all their contact information is right here. Their Skype and email. So if you don't get cash back on your trades, you should probably talk to them. All right, thanks everybody, and have a great interview with Ashraf. All right.
All right. Good hunting today, Blake. So Ashraf, if you're in the room, because I've typed in your name, can you send me a question? I don't believe Ashraf is here yet, so I know he's going to be here. I've been in touch with him on Skype. So until that time, let me go to me sharing my screen, and we'll just wait patiently. It's worth it. So just want to show you guys a few things I talked about while I'm waiting for Ashraf. He's still not here. I'm going to let him know we should be talking right now. Okay. So just to show you, the metals are following through with a stronger dollar here. Really nice action in the gold. Look at that. So they're really squeezing a lot of people. I talked about if we ever took out the initial high. Okay, Ashraf has an emergency. Okay. 15 past the earliest. I'll hang around. So if we start taking out these highs up here, which were the highs of the first wave, you're going to start really squeezing people. Here's a daily 50-day. Maybe there's a shot for this. I think we're going to reschedule. You can't see my screen? That's because I probably did it on Poly. No, I'm presenting. Okay, Mark. Okay. Right now. Can you see it now? Thank you, Amanda. Okay, so you could tell this was kind of the hypothesis all along, is that this was just consolidation for B wave and we should get C. So talked about it at 81, talked about it here in face yesterday buying the pullback. Had orders in at 87. It got down to a little under 85. Looking pretty good here. They're starting to squeeze them. And silver, again, this is what I pointed out for Stell. You look at this daily moving average, and we start clearing this 50-day here. There could be some real good upside, at least maybe back towards this previous low. So we're going to wrap it, and I'm going to have to reschedule Ashraf. I apologize. I was looking forward to talking to him. I know a lot of you guys are here, but he can't make it for another 20 minutes. "20 minutes past, he could do it. Okay, I'll stick around. Okay. So guys, you know, you have some time, about 14 minutes, if you want to ask me some questions. I did that one, Saeed. It's on YouTube. Google it. Dale Pinkert interviews himself. You're welcome, Izzy. Copper? Okay. Dr. Copper. Does Dr. Copper take Medicare? Anyone know? Where are you, Dr. Copper? I hardly look at it anymore, because I used to believe all bull markets are roofed in copper, and then we had a bear market in copper, and I never saw the roof. Let's see here. Here we go. Looks pretty good. "10 years. I was up and down, up and down. And I've interviewed thousands, or at least 1,000, Jason, mostly 4. How long have you been at it? So copper looks pretty good to me, guys, right? Left shoulder, little head, have a neckline right here. So all the metals look pretty good. This is pretty classic, right? So by pullbacks towards 270, you're wrong under 260. Oh, Dennis hasn't heard any guitar in a while. Oh, you found it. Okay. Hello, Shaitan. So someone wanted my view on the yuan. I think it's important to talk about this. So whenever the Chinese used to say something in commodity markets, they would say, oh, the Chinese are selling bonds. They were usually in there buying them, or they canceled a bean buy, a grain buy. The market would sell off and then they'd come in and accumulate. So when I heard over the last couple of weeks that they're not going to weaponize the yuan, makes me think that the yuan's going to get weaponized. So I don't know, maybe this is A and we're in a B. Maybe everything will look okay back down here at 560. But part of what I teach is momentum, okay? RSI, the real simple implicator. So when markets have price and momentum confirming the price, you can see this is the highest reading on the chart, the highest price candle on the chart. Normally that high doesn't stand. So I'm not sure where this correction ends or what shape it takes, a triangle, But this tells me, this reading right here, that we haven't seen the high in US stuff. And you have it again on the weekly, right? Maybe close to this one, but you know, markets usually don't peak with 90 readings, and that's 87 on the weekly. So I think they are going to weaponize it. Oh, this is the lira. Okay. I think the lira isn't done either then. All right. So you have basically the same thing. You know, they're trying to stop it. They said they weren't going to weaponize it, you know, in here. So we're moving sideways at a double top up here. But that's a pretty good reading up here. I don't know if this is a high. That's your weekly RSI at 80. There is some divergence here. I don't know, almost looks like the NASDAQ. Okay, Ashraf's in the car. It's on the way. You look all business. Okay. Okay. He'll be here at 20 after. All right. They're all valid, Mark. Just the time frame make, you know, the longer term time frames, the implications are bigger. Really? Okay. In 2017? Okay. 2017, we were back up there, right? Right here? Okay, so is your belief that we're going to get another one of these from here? I would have been more bearish if it would have cleaned out the high, And there was something else in 2015. Let's really get long-term telescopic here. Oh, this was a panic in 2015 where the market cared about it. So there's your monthly. I don't know. I can't topic it. And if you do, I guess you have stops where the rest of the world does at 695, 696. Okay, so looking for the highs to be taken out first, IZ. Okay, very good. All right. Anything else? Any other questions while we're waiting for Ashraf? VIX? Yeah, you know, VIX has been pretty interesting. Just really, again, an EKG, don't sell the sleeping market, but, you know, again, you look at a weekly chart, although we've made new highs in the S&Ps, the VIX is not at new lows. So if I was looking for one reason that to be constructive is why aren't we under 10 instead of 12? But it looks like we're going to need closes over 15 to really get this thing going. And here you go, you see 15. That's my view there. I don't trade platinum or palladium. See how Euro pound's acting. You know, this is a nice day in Euro pound. You know, my view has been for a while that I think we're going to take out this high for a third drive up here. So they tried to break it yesterday with that news, and then we had some more news today, you know, that everything's going to be okay in the UK. But, you know, this target's up towards 93, 94, 94. And then when you look at it on a monthly, that's going to be a lower high. But this could end up being a great short. But I'm looking for 94. It's incomplete. It's having a pretty good day today, guys. You know, it's not a big risk trade. You know, you look at some shorter term stuff here. Could probably risk closes back under 60. But if we start penetrating 89.20 here, it's going to look pretty good for me. For Indians, only 3 legal pairs permitted. Huh. Okay. Interesting. Are you a subscriber, Niraj? You know, it's the last day. I'm sure Paulie would accommodate you, maybe work that into his Excel, because I think he covers everything. INR is the rupee, right? I think that's terrible what governments are saying you can't trade or can't trade. It's just kind of a symptom of the times we live in, you know. Okay, you know, don't smoke, don't drink sugar. Yeah, a lot of news, yeah. What's that, Mark? Thai baht? See, I really don't trade a lot of exotics. You know, let me tell you a story while we're waiting for Ashraf. Is that I knew guys that never left one trading ring, okay? They didn't, never. They were a cattle trader. They were a pork belly trader. They were a yen trader. And you know what? They didn't have to diversify. And I don't know how it is for you guys, but if I get too spread out, I'm watching too many things, I lose clarity and focus, and then something that I really have a high conviction about, I turn my head and I miss it. So I think it's okay to, you know, be a master of a few instead of a jack of all trades, to use that as a pun. So I don't even know if I have that up there, Mark. So you could be successful just trading euro, right? And really know it like the back of your hand, every important technical area. There's an expression or a belief that if you can't remember the price of anything you're trading, you know, without looking at the screen, you're trading too many instruments. So hang on, I'll be back in a minute. Ashraf should be here momentarily. Okay, back. So good, a lot of you are sticking around for Ashraf. I know he has a lot of fans. So turnaround Tuesday, Yeah, the market's trying to recover. S&Ps are recovering again. Could be a fade. Yesterday, NASDAQ turned into the relative weakness over the prior ones, except for, of course, the Russell. Okay, so this is another divergence, but 80 is too much mo for me. I'd rather have it pull back a little bit more and make another rally attempt. You don't short a market that's doing this. Although this is a 3 drive I've been talking about. Here's 1, here's 2. Okay, Ashraf's logging in. So everyone, thanks for your patience. Ashraf will be with us in a minute, and he'll take control. Gold hasn't slowed, okay? Yeah. See how the shares are acting. Surprisingly, not much in the silver shares. Let's see what we have here. Not much in Nugget. Trying to carve out a right shoulder in the shares. The bullion is definitely stronger. There's Ashraf. Okay, everybody. Okay, Ashraf, I just passed you the controls. Looking forward to hearing your voice. It's been way too long. And very interested in the topic you brought to the table today. So all you have to do is enable your mic and your screen. There's your screen. You got your Bloomberg up and waiting to hear your voice.
Oh, hello. Hi, guys. Can you hear me? Can you hear me?
Can hear you, Ashraf. Yes, sure. Ashraf. What a, yeah, you know what? If you're the only guy I would wait around an extra half an hour for. Okay. And you know, it's been such a long time, and we always had such a, viewers loved it, you know, great chemistry. And I'm very interested in learning from you today. You want to talk about the correlation between the dollar and the yen and which one is truly the leader. That's a correlation a lot of people watch. So great to have you with me again, Ashraf. Let's not let this much times like the dead clock in reverse. It just ticks away.
Thanks for having me again, Dale. Thanks very much, and sorry for everyone for being late. This is something that was supposed to take 5 minutes, took 25 minutes. Don't ask me what it is. And and just when you thought that the bureaucracy was removed, it didn't. But and first of all, how is your health, Dale? How are you feeling?
Oh, I'm doing pretty good, Ashraf. Wow. So it's been about 4 years. I'm still breathing in and out. Fired all my doctors, so I'm just you know, making the most out of every day and assuming I'm fine.
And doing the stuff that you like, which helps.
Yeah,
which is very
yeah, like talking to guys like you, and the markets, they're always fascinating, aren't they? I mean, they are. I don't think we have to do brain exercises like a lot of people do later in life, because we're trying to figure out the jigsaw puzzle every day.
Yeah. Exactly, and this is what interests me. You know, my 4-year-old daughter, she said, "What do you do, and why do you like to do what you do? Why is it always the same screen in front of you?" And I said, "Well, every day, every other day is a new adventure, and trying to figure out the next day, the next month, the next 3 months, the next 4 months. Sometimes we're too late, sometimes we're too early, sometimes we're just plain wrong. So let's just get to it. And okay, actually, it's interesting what you said about dollar yen and the dollar index, because I have something in Paris coming up next week, and that's one of the things I'm going to talk about. And as for everybody who trades, you would have seen that as you know, the dollar index goes one way, the entire dollar index, but dollar yen goes the other way. The easy explanation, you know, hindsight 2020, is that yeah, because stocks were doing very well, but there's something quite interesting here. So let's just get right to it. And you know, I'm not going to bore you to death here about, you know, euro dollar is a big portion of the dollar index and so on and so forth. You know, for those of you who are just starting, the dollar index is 6 currencies, basket of fixed currencies, 57% of which is the euro dollar. So it does make sense that euro dollar is highly correlated with the dollar index. But what about dollar yen? And here is something else. And then there's another question which everybody is trading dollar yen wants to know. Did the bloody thing break or no? Did it break out or no? Did dollar yen break out higher or no? Yeah. So what do? Do you fit your analysis according to your needs? The weekly chart tells you something. The monthly chart tells you something else. Okay. And actually, when I was right ahead of the FOMC meeting, I was watching 3 things. I was watching gold, I was watching the 10-year yield, and I was watching yen. But let's just do something here. Okay. So but before I want to get into that, guys, I want to get into a more central question and a less esoteric question. Okay, so I want to get into a less esoteric and a more direct questions, which I think concerns most currency traders out there. Okay, because we don't have a lot of time. It's 2:26 p.m. London time. At 3:10, I need to be out of here. Okay, so in around 40 minutes. So let's not waste each other's time, and let's get right to it. Look. Euro dollar, this is euro dollar, this is the weekly chart. So there are 2 major questions. Is this a valid head and shoulder or no? This weekly chart on euro dollar, is this valid head and shoulder or not? Now, if it is if this will be realized, then the difference between the head, 125 or 26, and the neckline, 115, so we're talking about 1,000 points, the target will tell you 1,000 minus 115 will be what? 105. Okay, so if this is a valid head and shoulder formation, this means that euro dollar is going to fall. And everybody who listens to me speak, they usually see me as usually dollar bearish. So they're saying, is Ashraf feeling okay? Is it telling us that the euro dollar is gonna break down and dollar is gonna how is he feeling? All right? I thought I was not feeling all right. I thought, yeah, could this be right? But here is, and I'm not giving you, this is not my final answer. This is not the definitive answer. This is my opinion on things, and it is the way for you to argue it. So let's look at it. This is the regular head and shoulder, so it's bearish. Okay, and I'm not even talking about the inverted head and shoulder, which is very valid, which tells us that we're going to go towards 121. So this is, I mean, actually, let's go with it, and then I will go back to the weekly regular head and shoulder, which takes a while to disprove. But here is the regular. This is the inverted head and shoulder euro dollar. Okay, which is basically bullish. So you've got the head 113. Neckline 117, 400 points plus 117, 121. What is 121? The meaning of 21 in life, the birds and the bees. 121 is what? Is here. Is here. Is 121 is just right before the head. And for guys who trade dollar yen, usually this formation right before the head is a big resistance, but it's the left shoulder. But guess what? So in this formation, it's a left shoulder. So again, the inverted head and shoulder, I don't want to make you dizzy here by going from one formation to another, but this is a valid formation. It doesn't matter if one shoulder has 2 troughs or 3 troughs. It doesn't matter. It doesn't matter. And there's a head and there's a neckline. It doesn't matter if one shoulder, the right shoulder has 2 heads. Okay. There is a very, very, very famous euro dollar, which is formation. I want to show you. It's the one that helped me be against most people who were bearish euro dollar and bullish euro dollar. Sorry, and this was in 2017. I just want to take you there. Recurring patterns. This is the big one. It's 2017, and it is this baby right here. This, I don't forget it. This. Okay, so just want to get you. So this is 2016. This is Trump dollar rally. This is a Trump dollar rally here.
Yeah.
Trump election. This is the head. This is a left shoulder. And guess what? This is the opposite of the current formation. What do you mean? What do I mean by opposite? Opposite not in terms of looking up or down. The left shoulder has one trough. The head has the head. And the right shoulder has multiple troughs. And this was a beautiful thing. The head was 1035. Neckline 108. 500-point difference. 500 plus 108, it takes you 113. 113, yes, that's when the market went to 113. He said, hello, I touched 113, I'm going to take a break. And then you had the Macron election, the victory, which was the biggest euro dollar buy ever. And then you had, if you like, you know,
it gapped up and never
it gapped up. And then not only that, for the different technicals, for the different school of technicals, this was the perfect storm. Sorry to use the cliche. One of them is that finally it went above the 200-day moving average, which was 108. There was a golden cross, 55 above the 200, and then there was another golden cross, 55 above 200. So from the trend technical school analysis, you've got the moving averages, golden cross. You've got the chartist school, which is the beautiful head and shoulder setup. Why am I talking about that? Because if you go here, you see multiple shoulders, multiple troughs on the left shoulder, and so on and so forth. Now, let me go back to this head and shoulder. And usually people who see me talking about, you know, on TV and stuff and this and that, they see me talking about the fundamentals and blah, blah, blah. But let's just get right to it here, the technicals. That, you know, the fundamentals help you, make you smart at understanding the past. Technicals make you better enabled at understanding the present and the future. I'm not saying the fundamentals don't work. The fundamental, if you only trade on fundamentals, you are likely to do well if you work in the 6 to 9 months. You know, Ray Dalio's and all of those guys. But let's go back. Why is this not very valid? Why is this right shoulder is not very valid? Or is it? Let me just show you another regular head and shoulder in the euro dollar that did not work.
Because the right shoulder already took out the left. Could that be why it's not valid?
Okay, I'll tell you why. And here it's not obvious, Dale. Here it's not obvious. If you take a look at this, it seems like a valid head and shoulder. But from an intermarket point of view, Dale, I'm going to show you why. So before I show you why, here is a great example, and all of you who've been trading for over a year will know this. This was the mother of all wrong signals in head and shoulders in euro dollar, and this was October 2017. What am I talking about? It was this baby right here. It was October 2017, November, when the ECB did what they did, and there was a very dovish rate hike and so on and so forth. This, my friends, this. Et voila, here. And it was also a very misleading inverted head and shoulder in dollar index. Left shoulder, head, right shoulder. Oh, this was September 2017, exactly a year ago. 121, head. 116, so let's say 117. So we're talking about, again, 400 points. 400 minus 117, it gives you 113. Did we go to 113? No, senor, we did not. No. 113 is here. This was an invalid, so this didn't work out, basically.
It's a failed formation.
It's a failed formation.
Aren't some of your best trades when formations fail because you have everyone wrong-footed in the market?
I'm sorry, go ahead.
Some of the best trades are when formations fail, like a failed neckline. People went with the neckline, then it's back above the neckline, and you still have a lot of people on the wrong side of things because they were expecting lower levels.
Yes, but the question is, what makes you different? What makes you different in saying I think people are wrong. I think this is a wrong formation.
Getting back above the neckline. Getting back above the breakdown, negating the breakdown.
You can do that. You can say that. But here is something else.
Thank you. All right.
But here is something else. Here is why I think that this weekly one, even though it looks valid, there is an issue with it. Why is it? and again, this thing called the euro dollar is part of the puzzle called the dollar index, and it's 57% of it. So what we're going to do, Dale, we're going to see whether this weekly regular head and shoulder does translate into a valid or a valid looking inverted head and shoulder in dollar index. Okay? Shall we do that? Okay, let's do that. So this is the euro dollar. I'm going to go into the dollar index. Where is it? Where is it? No, actually, wrong chart. Sorry. It's here. It's here. So this is the weekly chart that I was talking about. Okay. And let's go to the dollar index. I will let the analysis answer you rather than me telling you what I think it is. So I'm going to go to the weekly because you can look at it better in the weekly. Sorry about the background noise. Busy working place here. Et voila. I will let the answer. You see, technical analysis, ladies and gentlemen, the most successful, it works with the naked eye, i.e. stuff that you don't have to dig deep in the indicators underneath and so on and so on. So let's look at this. Here is this thing, the weekly on the euro dollar, and I said the right shoulder is questionable. Now you tell me, Dale, what do you see? I'll give you 3 minutes. You tell me, does this look like a valid inverted head and shoulder in dollar index?
Yeah, it could be, but I see a lot of resistance at 95.5, 95.60. That was a very important resistance level for me. So I'm not convinced we're blowing to new highs from here.
Well, Dale, and again, the attendees, please feel free to give questions to Dale. I don't know if I can see the questions here. Let me see.
Guys, any questions? Do you guys believe this is a valid head and shoulders? That's a question Ashraf is presenting to you. And your rationale for why. IZ says no. Why?
It's always about the why, guys.
Yeah. I mean, yes, no is a coin flip. The why is how we learn. I don't see a left shoulder on the Dixie. Marius.
Thank you very much. Thank you very much. I don't see a right shoulder here. There's no right shoulder. There's a left. Okay, you know what? I started technical analysis today. Okay, today. And what I'm going to do, here's what I'm going to do. I'm going to do this like anybody who would be learning would do this. I'm going to go to this thing called the internet, which Al Gore invented. Okay? So head and shoulder.
I think he was dreaming. He was sleeping and woke up with the idea.
Yeah, I'm in England, and the English says that we invented it. It doesn't matter. Right?
Okay.
So each time I go to a place, they say they invented the internet. I don't know. Don't take my word for it. Here is an inverted head and shoulder. There you go. This is a shoulder. This is what a shoulder looks like. Left shoulder, right shoulder. There is a legitimate trough. Now, again, so I'll spare you the detail, but you can look at it. Images, inverted head and shoulder. This is not brain science.
All right, shoulder. So the key is, Ashraf,
where is the right shoulder?
Knowing is really knowing what a valid head and shoulders looks like, rather than just having a vague idea of head and shoulders patterns, and that's going to increase your consistency.
Level of confidence. Level of confidence, because look, if this thing may be euro dollar may be valid, but okay, maybe is this invalid? I've just shown you an instant where it was invalid in October 2017. Now let me go back. If the dollar index is not playing ball, like they said, if it doesn't fit, quit, and everybody is declared innocent. But you see, there is no left shoulder here, and so and what does this mean? So again, I'm showing you something else. And so when the dollar was rallying and euro dollar was falling below, 114. Everybody said that's it, we're going to go to 105, 108, and I was saying, oh man, my thesis that the dollar is going to go back down is totally wrong. Yes, this is an inverted head and shoulder. And then I started digging deep. Now I am not moving the goalpost. No, I am not looking for something just to fit my needs and my wants and my thesis. No, there is a few other things, and let me show them to you. There is this thing called the dollar yen. So dollar yen, where do we start?
Dollar yen gave you confidence about the call in the dollar.
No. I think dollar CAD gave me the confidence. It was falling and falling. Dale, dollar CAD, dollar Swiss, euro dollar somewhat, but dollar yen, no. Dollar yen was the one that was not working for me, because as the dollar index was peaking or falling, dollar yen was going up, partly because of a rising stock market, because of a broadly falling yen. But guys, I'm going to take you to the weekly chart, and you tell me, Dale, you tell me. This is a weekly chart. Maybe we broke, maybe we didn't broke, maybe I arbitrarily did not connect this. I connected 1, 2, 3, okay? Maybe we're breaking this. On the monthly chart, we did break it. We did break it. But then there is something. We did break it. So maybe we could go towards 115, and then we can come down. Then there is something else. If you believe in yields moving along with the dollar yen, as I'm sure you guys do.
I do.
Yields.
Yeah, although that didn't happen last week. Yields came off after the Fed, but U.S. dollar yen kept going up.
Let's look at it, Dale. Let's look at it together. And again, I don't want to impose my opinions on you. My opinions are there. I have them. I'm comfortable with them. But here's what I want to show you. So what is this? This is dollar yen, the yield. No, this is the right one. Here. Okay. So the white is the 10-year yield. Okay. The white, which is the measurement is here.
Right.
The green and the red is dollar yen. Okay. Now look at the white. Let's just ignore the green. The white one is facing resistance here, which is on the 10-year yield. And if you're not convinced with the technicals of 10-year yield, let me just show you something here. Let's just go here. And I'm going to tell you, yes, I'm going left and right and center. I'm going from euro dollar, but this is all part of a puzzle. It's all part of a machine or an orchestra. Maybe one player starts to play better, and which one is going to lead the others? It's depending on the extent to which, he or she is convinced with the flow. Okay. And then it depends whether they lead. And this is, guys, I said, use the naked eye. Is this resistance to you?
Yes.
Month of May, 311, we come down. Yeah. We fail. Month of June, you come in, you fail, you fail, you fail, you fail, and this is the new month. Let's look at it how it looks on the weekly chart. Oh dear, what is this? Okay, some people say it's a double top, some people say it's just a failure, boom, 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 and then you have the daily. So some people say, oh, it's a lower high. Whatever you call it, whatever you characterize it as, okay, maybe some people say, oh, this is a W formation, and it's going to take the John Murphy, and it's going to look at the index, it's going to call, and it's going to call all the charts, under the sun. Whatever you call it, this is called an inability to rally. And if this is called an inability to rally, dollar yen does not have much going for it, okay? So basically, this is the way I'm looking at it. And then dollar CAD, which is, we were lucky to be short in dollar CAD in the last few months, and then, but then we went in even after NAFTA, and I'll tell you, this is something beautiful about dollar CAD, which is, it's not just about NAFTA, but it's about the biggest infrastructure deal that happened in the history of Canada. $31 billion, a Royal Dutch Shell are going to start a project in the west of Canada, which is going to be the biggest infrastructure project in the history of Canada. Trudeau, okay, the leader of Canada, went from a very bad month of June, his G7 didn't work because Trump was taking the mickey out of him in his own house. Now, comes 3 months later, Trudeau wins, he gets NAFTA, and he gets the biggest thing in the biggest infrastructure product. Never mind fundamentals. This thing is called the 200-day moving average. You broke it.
Yeah.
This thing is called a support. You broke it. This thing called the 55 falling below the 100 DMA. It's broken. We know what it's called. And if you don't like that, here is something else. Here's a weekly chart. Now we're testing the trend line support. I'm going to tell you, we don't have much time, but I'm going to tell you what are one of my favorite trades. I can't leave you with that. Yes, we're holding a big support here, so maybe we're going to take a break at 128. But listen to this. Here are the monthly charts. This is pretty solid stuff. This is a trend line from December of 2015, okay? And the market, maybe it broke, it closed above it. Here, it went all the way above, and I decided to go back at the end of the month and close below it. Here, it closed above it, and here, last month, it went all the way up, and then it broke, and on the last day of the month was the GDP in Canada, much better than expected. Ladies and gentlemen, this is a case of technicals trying to predict what the reaction to the fundamentals is going to be. And now we're here. So this market, and if you go to the stochastics, if you want to know how to use it, this is called the bearish conversions. The regular, the fast stochastic, meaning the most sensitive, the regular or full stochastic, meaning not so sensitive, and the slow stochastic, which is basically the least sensitive. They're both, all of them, pointing in one direction.
So my impression of this breakout of this monthly trend line is Mr. Market's not going to give you 4 months to buy a breakout and make money. If you're given too much time and a breakout is too many opportunities to buy the breakout, be skeptical.
You mean, yeah. You mean a breakout? How exactly? Listen,
I mean, the breakout was 5 candles ago, and Mr. Market's saying, "Oh, well, you didn't catch that breakout. I'll give you another 4 months to make up your mind to get long against its line." Be jaded and skeptical, correct?
You can, yeah, yes. I mean, listen, I'm not, Dale, I mean, you know as well as I do, I'm not saying that you cannot make money by going long dollar CAD. You know, you can, you can. But of course, you can make money in either way, every way, left, right, center, knowing when to get in, knowing when to get out. Don't get too carried away.
But when markets accommodate people too much, you know, that, you know, a market breaks out and then gives people weeks to buy the breakout, how good is that signal? Normally, if you're not there for the breakout or one retest, if it gives you 5 chances to buy it, Mr. Market's not that nice of a guy to accommodate you to make up your mind with 5 opportunities. That's the way I look at it.
And as long as exactly, I mean, you can make money in the 15, in the 20 minutes, in the 1 hour, but as long as you are sure and positive and quote unquote confident with the bigger trend. And here is the trade that we made from the 3rd of July. We were shorting dollar CAD from the 3rd of July at 130.150. We closed quickly at 140 pips, even though we were targeting 128. We got out. We got back in at 130.40. We closed, and now we're going back again. And the chart is here, but I don't know if we can see this. Yeah, and this is basically the rationale. So again, so what does this mean, ladies and gentlemen? Now, let's go back to euro dollar. Euro dollar is at a place where it's a good buy. Not good buy as in hello, but it's a good BUY. This is the monthly chart, okay? Dale, take a look at this. This is exactly what you just mentioned about the breakouts 5 candles ago in dollar CAD, okay? You said, yes, we broke. Intra-month we broke. Well, look at this. Do you remember when Italy was all the news and they make a government and yields were soaring and so on?
Yeah.
Even though, guys, everybody who is sitting in their sofa, in their chair, in their beach house, in the sauna, in the sofa, in whatever, you take a look at this. When this thing does all of this and it tests 115 and it goes back, May, and then when Italy is about to go back, some people are talking nonsense about Italians leaving the euro, total nonsense. Other people are talking about Germany leaving the euro, total uber nonsense. All of this happens. 115, you go back.
Don't you want to trade Deutschmarks again?
Oh my God. I mean, really, I just got a WhatsApp. I'm on various WhatsApp groups and then this guy says, hey, Ashraf, when do you think Germany is going to leave the Eurozone? Germany is the Eurozone. Germany is the Euro project. They did it in Brussels. There is France, but Germany, I mean, nobody wants the strong mark. Never mind.
Yeah.
Forget all the fundamentals. you'll just pay attention to this. When something does all of this noise and still respects 115, and it does this noise and it respects 115, if you don't get it the first time, if you don't get it the second time, I'll give you another chance. I'll give you another chance. Oh, it's going to 105. I'll give you another chance. I'll give you another chance. Some people says, oh, but you got lower closes, lower highs. Do you have lower highs? I don't know. This is a candle. This is a monthly candle. Here's the high. Where is the close? And then what does this mean? Does this mean anything? Yes, it means. Does it mean something? It may be. What is this? Just like it's the inability to rally here, and then you finally broke. July 2017. Right. Yeah, July 2017, we were getting close to the ECB trying that we're going to reduce. So what does this mean? And now let's go and check this out. Now, the stochastics are trying to fix themselves. Now, so for me, I am more confident in going long euro dollar. Basically, if we do close a 114.80, if we close the week or we close the day a 114.80 or 114.70, then there's a problem. There's a problem. If we close below this shoulder, you got a shoulder here, 115.11. If we do close it for 2 days in a row, or if we close the week, then it's a problem. Then there's a very good chance that we're going to go down. Okay, as long as we don't close it, then we are fine. Okay, there's one trade which I like. Everybody says, Ashraf, you're based in London, and how is this sterling? I made money shorting dollar versus the CAD, shorting dollar versus the euro, shorting dollar versus the Swiss, but I did not dare short the dollar versus the pound. And even on the recent run-up in cable, I did not touch it, but I did not I did not regret. But there is one thing, Dale, which you should look at it. And for those of you who like to trade FX for longevity, you know, with a boring pair, guess what it is, Dale? I'm sure you know which one. It's a sterling pair, but it's not cable. It's a boring pair, but it doesn't take a lot of money. Which is it?
I'm stumped.
It's a sterling-related pair. It's not cable. It's not sterling yen.
Oh, euro pound.
Thank you very much. Gracias.
I love that pair.
Gracias, señor. Et voilà. If you're saying you didn't get it, this is a daily chart. And if you're saying you didn't get the signal from the first time, or the second time, third time, okay, yes, we're falling, but we're respecting multiple confluence of support levels.
I love it here.
Okay, and this is something else we are long. And my God, you have to be really patient. For the little hair that I had, I lost a lot of it just being long in this one. This was supposed to be a head and shoulder. I went long in 2nd of May, 87.80. 2nd of May, just want to show you this. 2nd of May, this was an inverted head and shoulder. Here he goes, Ashraf, with his inverted head and shoulders. There he goes. Here he goes. This was, I went in the 2nd of May. I was so happy with myself. We're going to go up. Left shoulder was here. Right shoulder was here. The shoulders start to go up. Rising uptrend. Guess what? We went
sideways.
87.80. Guess what? 87.80. Technically, the head, 86. The neckline, it depends which one. Let's say 88. Yeah. I thought we were going to go up. It came down. The stop was, you have to have a considerably large stop. 88.30 was the stop. Guess what is the low? 80. No, what am I talking here? 86.80 was the stop.
Yeah.
80. 86.97. I was lucky.
Yeah.
I was lucky. Low 86.
Nothing wrong with luck. Yeah, nothing wrong.
You need that. And
there's a little skill too.
And then you know what they say. The harder you work, the luckier you get.
Yeah.
Okay, so good luck doesn't come with hard work.
Ashraf, what a great presentation, and I know that you have something going on a little later. The best way for people to follow you is on Twitter. You're at Alati, but what's the name of your website where people can subscribe?
Yeah, thank you. It's this is it. This is ashraflindi.com, and basically this is my Twitter. It's ALID right here, right. And ALID. But there's a lot we can cover. But basically, one of the things is that dollar CAD looks good to me. Dollar CAD still looks good. The dollar yen, if you want to venture it, be prepared to put a stop above 115. I'm sorry, they can't put it this other way. If there is a way to get into bottom picking, euro dollar is not bad. And then finally, dollar Swiss. This is something for you to look at. Dollar Swiss is also a pair. So here's something for you to look at. And what it is, we're looking for probably a double top, but this is breaking out. So we have to see whether this foundation is going to be taken out. So we have to see this. Maybe there's a trend line here. I don't know what's your opinion on that. It's very expensive for a lot of people to trade dollar Swift nowadays. But this is something to look at also.
Okay.
And, you know, for indices, I don't know how many people of you trade indices. The DAX, we reshorted. You know, there is the big trend line from February 2016. Everybody should know the meaning of this. This is the one that the low from March 09 goes through it. Okay. So
okay.
Again, I mean, you said Ashraf has to go. Does that mean that you have to go?
No. No, I thought you said 10 after, 5 after.
Yeah. Okay. No, I need to get people, try to give them as much as they can get. But this is the famous March 2009 low, and March 2009 low passes by February 2016. February 2016 is a very important support because it goes through it, that important, you know, low from the crisis low. And and if you start from February 2016, we are trying to break it in the DAX. And here it is. So the market is trying to make up its mind. And the reason that I put these boxes here is because this is a consolidation box, and the market is trying to get back above it, and it's still trying to make up its mind, trying to get above it. The FTSE is something that I like to short also. The DAX is not bad. Look at the DAX. Here's a daily chart. Let this speak for itself.
Yeah.
This is a trend line.
Lower highs, lower lows.
And one last thing about the Dow, which is something that I've shorted many times and I lost money on many times. But there is something which is the Dow theory, which shows you the following. When you have the lack of confirmation from the transportation index and the industrials index, this thing hit a high, but this thing did not hit a high.
Right.
When this does not confirm this, there is an issue. This sheds light, and there is something else. And if you look at the high, even though the Dow hit an all-time high, is it really an all-time high?
No.
Is it? Yes, it is. It is. This is the high.
Oh, yeah.
The market went above it. It did close, and it is hovering here. But this is something else. Maybe there is not enough conviction here because this guy, this is the riders, the FedEx, the all the transportation guys. Yeah. Some people says, oh, you're still doing all the economy stuff. It's a new economy. Get with the program. Okay, that's fine. But what does this look like to you?
The banks too look very heavy.
What does this look to you? What does this look like?
Shoulders top developing.
So basically, if the transportation is showing you this, while the Dow is still basking in its party here, this really shows you something. Yeah. And then finally, to take a look, the big picture is take a look at all of this. Basically, so this is the Dow, this is the S&P, this is a NASDAQ, and then you've got the emerging market FX, which is for you just to have a look. This is the Chinese yuan. Just have a look at this. This is the dollar versus the Chinese. As long as the dollar cannot go to 7, as long as the dollar cannot go above 7 against the Chinese yuan, you cannot say, this is the moment where the dollar is going to rally and is going to soar and so on and so forth. You cannot do that. You cannot say that. This is a huge level, the 7 level against the yuan.
Right.
We failed it many times.
Double top on the monthly or weekly. Yeah.
Exactly.
Yeah.
So that's basically that. And there's all that I can talk about right now. Thanks very much, Dale, for having me and pushing me. This was worth it. And but again,
I want to thank you, buddy, my trading warrior brother, for taking the time out of a crazy day you were having to be with us and give us some crystal views on a lot of things. I learn from you every time I hear you.
Thank you very much, and I wish I had more time to ask you your opinion about things. Hopefully, we will do it next time. We'll sit like normal people, taking full hour.
And we won't let 2 years pass before we do it again. I promise.
Definitely. Excellent.
All right, Ashraf. Everyone, thank Ashraf Ladi Follow him at Alati. Follow him on his website, www.alati.com, and a great resource if you're interested in being with a pro. Ashraf is.
Appreciate it. My pleasure.
You're very welcome, Ashraf. Everyone have a great day. See everyone Wednesday. And remember, don't just count your pips, count your blessings. Thank you, Ashraf. See you, everyone. You're welcome, Tom.